If you're watching this, then you're probably as invested in the crypto space as we are. Now, we all know how unpredictable the market can be, but last month was especially interesting. Today, we're diving into the latest Binance research report and breaking down the major trends that impacted the crypto world last month. From massive hacks to the shifts in DeFi, we've got you covered. Let's get into it. First things first, the market. In February, the crypto market saw a decline of over 20%. It is always a little unsettling when we see such a sharp drop, and this one had a few key drivers. Among the most significant was the general bearish sentiment affecting both crypto and the traditional financial markets. And we also have to acknowledge the historic $1.5 billion hack on Bybit. This, coupled with a notable dip in the popularity of meme coins, something that's been on a steady rise for a while, but not this time. The broader market trends, they weren't too different from what we saw in the traditional financial markets, where a combination of overvalued tech stocks and macroeconomic uncertainty led to a risk-off sentiment across the board. Speaking of that hack, let's dive a little bit deeper into the Bybit situation. In February, Bybit suffered a devastating security breach, the largest in crypto history, resulting in the theft of over $1.4 billion from its ETH multisig cold wallet. This attack was linked to the Lazarus Group, notorious for targeting crypto platforms in the past. Now, despite this huge breach, it's an important notice that it doesn't mean crypto is inherently unsafe. The industry is evolving quickly, and exchanges are constantly improving their security measures. However, incidents like this, well, they remind us of the need for caution and the importance of securing your assets. More about that in the description. Now let's move on to another big trend, meme coins. For a while, they have been on an absolute tear, partly due to the massive popularity of coins like Dogecoin and Shiba Inu. But in February, we saw a significant pullback. Investor confidence dropped dramatically after the collapse of LIBRA, a meme coin that was once heavily promoted by some pretty big names. Meme coins often attract speculative interest, but as we saw, when things go south, they can take a big hit. The lesson here is don't get too caught up in the hype, and always be prepared of the possibility of a sudden downturn in these kind of assets. Now let's move on to Bitcoin. Bitcoin had a pretty rough February. The leading cryptocurrency saw a 16% drop, primarily driven by broader market weakness and a lack of positive catalysts. Between February the 24th and 26th, Bitcoin experienced extreme volatility, with nearly $3 billion in liquidations. It was the largest price drop for Bitcoin since the FTX collapse in 2022. But that's important to keep in mind that this kind of volatility is typical for Bitcoin. Despite the short-term decline, many remain optimistic about Bitcoin's long-term outlook, especially as it continues to develop as a mature digital asset. And moving over to Solana, once a rising star in the space, it also faced challenges last month. Its total value lot dropped by 30%, the lowest it's been since November 2024. Now this drop, it was mainly due to a steep decline in meme coin activity and investor uncertainty, especially around upcoming token unlocks. Traders reacted by moving nearly $500 million from Solana to other platforms like Ethereum. It's really a reminder that even the most promising networks, they can face serious headwinds if market sentiment shifts. Now let's take a look at the DeFi sector. February was a rough month for DeFi as well, with its total value lot dropping by 14.6%. Now this was in line with the broader market pullback, but it also marked notable shifts in investor behavior. On a more positive note, the regulatory landscape for DeFi saw some developments that could signal a much more favorable future. This could be a sign that regulators are taking a more balanced approach to DeFi, which could help the space continue to grow despite market turbulence. And there you have it, the last month of crypto in a nutshell. From the market 20% drop to the struggles of Solana, a lot is happening in the space right now. And it's clear that while the industry is facing some tough challenges, it's also evolving and adapting at a rapid pace. If you enjoyed the breakdown, don't forget to subscribe and hit the like button so you don't miss the next one.